You can feel it. The market is quiet right now, almost too quiet. It's Sunday, April 19th, and traders are asking one question. Is this the calm before a major move, or the start of something bigger? Because right now, everything looks surprisingly stable. Futures are slightly green. The S&P 500 futures are hovering just above key support levels. Nasdaq futures are holding steady after last week's tech bounce. Oil prices have cooled off, and gold is still sitting near elevated levels, signaling caution under the surface. But here's the thing. This calm isn't coming from strength. It's coming from relief. The biggest reason markets are holding up right now? The fragile ceasefire between Iran and Israel. Last week, tensions were pushing markets toward panic. Oil spiked, volatility surged, and safe haven assets like gold took off. But now, with a temporary de-escalation, investors are stepping back into risk. That's why stocks didn't collapse. But don't confuse this with a full recovery, because if this ceasefire breaks, even slightly, you're looking at instant volatility. Oil could spike again, inflation expectations could rise, and the entire market sentiment could flip overnight. Let's talk levels. The S&P 500 is currently trading near a critical zone, hovering around a key psychological range that traders are watching closely. If futures hold and push higher into Monday, we could see continuation toward recent highs. But if sellers step in early, this could turn into a bull trap, especially because volume has been weak. And weak rallies don't usually last. Now let's bring in Bitcoin. Post-halving volatility is doing exactly what seasoned traders expected. Choppy, unpredictable movement. No clean breakout. No strong direction. This is classic post-event behavior. Liquidity is shifting. Big players are repositioning. And retail traders are getting shaken out. Bitcoin right now is not leading the market. It's reflecting uncertainty. And that's not a bullish signal. At least not yet. Now here's where things get dangerous. This upcoming week isn't just about geopolitics, it's about data. We have inflation expectations building again, and traders are already positioning ahead of the next CPI release and Federal Reserve signals. If inflation comes in hotter than expected, everything changes. Rate cuts get pushed further out, bond yields could rise again, and growth stocks, especially tech, could take a hit. And don't forget, Fed speakers this week could easily shift the narrative. One hawkish comment, and this entire calm could disappear. So what could go wrong? Simple. Ceasefire breaks. Inflation surprises. Fed turns aggressive. That's your triple risk setup. And markets right now are not pricing in all three at once. That's where danger lives. So what should you actually watch when markets open Monday? First, futures reaction. If S&P futures hold green into the open, that's your first sign of confidence. Second, oil prices. If oil starts rising early, that's a warning signal that geopolitical risk is back. Third, bond yields. If yields spike, expect pressure on stocks. And finally, watch Bitcoin. If Bitcoin breaks down while stocks stay green, that divergence could signal weakness ahead. Because here's the truth. Markets right now are balanced on hope, not certainty, and hope doesn't last long in financial markets. Stay sharp, stay informed, and don't confuse calm with safety.